yourself. Bureau Report, Rajya Sabha TV.
Lekha, we just heard that despite the mad scramble initially for licenses, the RBI finally got to 26. In 1993, when they first opened up, they had about 113 applications and they issued only 10. So why do you think there was, despite all the hype, why was there less interest in terms of number of applications?
I really don't know what's the magic behind this number, but what worries me is the details. This 26 applicants, if you look at, if you categorize, the corporate, the big industrial houses, they are getting into the banking sector like Ambani's Reliance, then you have this Tata and Birla, and also you have these NBFCs. I'm thinking about the Consumer Finance they are going to create once again. And the third category
and you also have Mr. Birla sitting on the RBI Central Board.
Of course, that is conflict of interest. So these three categories are, a little worrying me whether what they really intend is financial inclusion. Because it's a large bank or a large number of banks. Because we heard that Chidambaram, the finance minister, he told that there's no cap in the number of licenses. But at the same time, RBI governor, he clearly mentioned that we are not going to issue licenses for all eligible candidates. So there is a conflict between what we heard from the FinMil and what we are hearing from the RBI. So really there is a kind of ambiguity. And then when it comes to the requirements, maybe that's one of the things which stall the process, because the requirement is 1 in 4 banks you have to open in a rural. So that's an expensive thing, that penetration. And second point, you have to keep a certain amount of deposits, like 3% with RBI and 24% with the government bonds. So this kind of requirement is there. So it's a kind of preemption of the vulnerable funds. From the very first day onwards, you are required to keep a certain amount of your deposits with. But bank ultimately, instead of financial inclusion, if they go for margin, if they go for profitability, more than the financial inclusion aspects, expansion of branches aspects, I really don't know. But India is largely unbanked, so this is a welcome step. We are going for new licenses, but the way in which it's going to proceed, because when I look at the category of applicants,
the corporates always say that why are you always painting us as black sheep? It is not necessarily that we are all going to run away with their money, and RBI has its own safeguard, does its own due diligence. But between the two objectives, financial inclusion and greater competition, after all, these corporates will bring the best of technology, will have deep pockets, will have the necessary wherewithal to give you the very modern banking. So between these two, increased competition, newer products that you and I can enjoy, and financial inclusion, what do you think the RBI should focus on?
Yeah, it's conflicting, because you are focusing on financial inclusion, financial innovation, the competition. So for me, it's a financial inclusion. It's more because the poor are bankable clients. Their problem is access to credit. It's not the cost of credit. So when the wholesale finance happens, it's like a high rate of interest. They are doing the wholesale finance with the indigenous bag limits, the indigenous money lenders. So it's access to credit more than the cost of credit is for poor ones. So for me, it's financial inclusion.
Okay, so if you're going by financial inclusion being the most important, then which of the various applicants would you think is the best place?
That's what is worrying me, because I don't know. The first category is the state-run, the sponsored IDFC, because they are going for mega projects. They can finance mega projects. Then the second is our corporate industrial houses.
No, what about India Post? You forgot about India Post.
Yes, India Post.
Yes, because they have the widest reach inside the interior. So would you think India Post, the postal department, stands a good chance? Will government corporatize it? What is your sense of that?
Theoretically, yes, but I don't know the empirical evidence. Theoretically, it should be. Yes, but I'm not hopeful about NBFCs because of consumer finance, which has happened quite a bit. But I'm not hopeful about the profit-motivated industrial houses.
So I think when we move to market-based economy and we can have economic reforms, we thought that profit is not a bad word, provided the profit is earned ethically and it's
of course, if the bank in loss for more than a year, we won't deposit there. But when it comes to the question of bank-based or market-based, the bank-based economy, it is because of that,
ultimately we see that banks fail. Ultimately, it is taxpayer money that goes to them out.
As we were bank-based more than market-based unit.
So regardless of whether it is government-owned or private-owned, ultimately when push comes to shove, it is taxpayer money that finally goes into wheeling these out. So the RBI has taken various precautions, apart from saying, they will decide who is fit and proper, and they've been very careful in saying that the RBI will be the final arbiter. Though there is an expert panel which will decide who is eligible and who is not, the RBI will take the final decision. So we will decide who is fit and proper, and our decision cannot be questioned. So do you think we can, trust the central bank? After all, central banks are the repository of public trust. So can we trust RBI to take the right decision for us, or do you worry that there could be political interests?
For a moment, even if you trust the central bank, you just imagine the conflicting objectives they have in inflation. What are things RBI can do?
I'll have to stop you there. We will come back. We'll just get sequence to a very short break. We'll be back with you to discuss the last story of this week.